Quello che vedete alle mie spalle è l'andamento dell'oro dal 2016 a oggi, prezzo più che raddoppiato, è il vecchio metallo giallo che diventa la star dei mercati. André Dragosch di Bitwise Europe ha però una teoria diversa. Sarà solo un momento dell'oro prima che arriverà anche per le banche centrali quello di Bitcoin. Teoria molto bullish che analizzeremo con lui insieme a tante altre cose in 30 minuti di intervista molto molto densi di alfa, come lo chiamano quelli bravi. Intanto iscriviti al canale per permetterci di condurre più interviste di questo livello e goditi questi 30 e più minuti di analisi di André Dragosch. Welcome to André Dragosch. I hope I spelled your name correctly. He's the head of research at Bitwise Europe, and he has some nice theories about the future of Bitcoin as a store of value, I think. Welcome, André. Thanks for being with us.
Thank you, Gianluca. Yeah, I think you spelled it perfectly. And yeah, thanks for the invitation.
Yeah, thank you. Thank you for being with us. So, André is the head of research of, can we say, a crypto-only fund manager? I mean, Bitwise is quite concentrated on crypto assets.
So exactly, yeah, we're crypto specialists, yeah, Bitwise. We are around 120 people in North America and Europe. And we managed around 15 billion in client assets already, and across 30 different products covering 30 different crypto assets. But yeah, we're crypto specialists. So.
And there are many to come. I think you're waiting for approval from SEC in the United States. Probably you would have more products by now if it wasn't for the shutdown. I think you're waiting for that.
Yes, exactly.
But here in Europe, the situation of the market is quite different. It looks like Americans like risk more. They like ETFs more. What do you think? Are we going to catch up?
In terms of flows, I think it's unlikely that we'll catch up. Maybe with the UK retail ban lift, right? That just happened yesterday/today, right?
Yep.
Today, retail investors will have access to crypto ETPs for the first time in the UK. So that might change because London's also a big financial center, capital center, right next to New York. It's probably the second biggest. So yeah, there might be some catch up. But I mean, if you compare the AUM and also cumulative flows into US spot Bitcoin ETFs versus European ETPs, right? It's such a strong difference, right?
Yeah, it's
despite the fact that they've essentially been like 4 years late to the party, right, to the ETP flow party, because like the first European ETPs launched in 2019 on 6 in Switzerland, and ours at ETC Group. So we were called ETC Group before the acquisition by Bitwise last year. So our product from ETC Group was launched in 2020, right? So we're already we launched 5 years ago, right? While the US spot Bitcoin ETFs just launched last year, right, in January. So we've been like essentially 4 to 5 years ahead of the US, but still they've overtaken us so much, right? I think in terms of AUM, it's 90% US, or let's say 80% US, and the rest is Europe, Asia, and so on, right? So they've caught up massively, right, in terms of flows.
Yeah, no, it's probably impossible to catch up, but it's the same on other markets. I mean, the size of USA stock markets is just one of a couple of steps above the European markets. And yeah, what's weird is that in Europe we had a full bull run, the 2021 one, with the ATPs already being available to the public, and it didn't change much. So the focus will probably always be in the United States. And it's in the United States that we saw a huge shift also in terms of narrative. I don't think, look, I'm going to name one of your competitors, but I think that nobody was foreseeing Larry Fink of BlackRock talking in that way about Bitcoin. Do you think it's a normal shift? It's just due to fees and money, or there is a real change of mind at the highest level of the financial market?
Yeah, the question is why that is, right? Why did he change his mind, right?
Yeah,
We
yeah.
cannot look into his mind, but I think there are a number of factors why he changed his mind, right? I think essentially 3 points. And there's actually an interesting book which is called Bitcoin for Institutions by Brian Hirschfield. I think it was published this year. And he actually made the point, or like the hypothesis, that Larry Fink changed his mind because of the bond blow up, because sovereign bonds blew up essentially with Fed rate hikes in 2022, and also that you've seen the secular reversal, right? This change in trend from, like, essentially we have had 30 years, 35 years of a downtrend, right, in US sovereign bond yields, but like
Yeah.
globally, right?
Yeah.
And that's changed. I think the low was during COVID, right?
Yeah.
When most bond yields went negative, right? And then you had this massive reversal starting in 2022, essentially with Fed rate hikes, right?
Yeah.
Because inflation was accelerating and so on. But yeah, that led to a massive bond bloodbath, right? It essentially
Absolutely.
led to like the most severe bear market in bonds, right? And there's also another factor, which is the Ukraine invasion by Russia, right, in
Yeah.
2022, which also led to a flight to safety away from US Treasury bonds to gold, right?
Yeah.
And
Sorry.
so, like,
That's sorry if
yeah,
I'm interrupting you. That's something
no
weird. I
problem.
mean, now everybody's writing about that, but yeah, this shift from U.S. Treasuries to gold, which means that people do not consider U.S. Treasuries as a safe harbor anymore, started in 2022, and it's quite a shift of the investing narrative, I think.
Yes, exactly. So I think like these 3 factors, right? Russian invasion, because the West froze Russian assets, foreign assets, right? And essentially, U.S. Treasury bonds were politicized,
Yeah.
right? And they became they used to be counterparty risk free essentially,
Yeah.
but this kind of confiscation risk increased, right, from the Russian invasion onwards, and so that changed the whole paradigm essentially. And obviously, like most central banks have been divesting from US Treasury bonds, especially Eastern central banks like Chinese,
Yeah.
Indians, Russians, and they bought gold, right, primarily. But also, we know other central banks, like we had inquiries at Bitwise, they actually shifted from US Treasury bonds to Bitcoin. That's a true story. They shifted to Bitcoin ETFs. They bought Bitcoin ETFs to diversify their reserve assets as well. So there's like a massive shift, but it's like central banks primarily buy gold, essentially. That's like the key asset they're buying right now. And you can see it in the performance, right? You've seen like gold
Jeez.
performing by, I think, 50% year to date, right?
See,
And
something
Bitcoin
like that.
is
Yeah.
still positive, but only, I think, by 10%. So gold even outperformed Bitcoin. And I think from a big picture view, you have this debasement trade which is going on because, I mean, I think even the US government itself, they realized we can't do austerity, right? We can't cut
Yeah.
spending with Doge, right? The Department of Government Efficiency. And we have to manufacture some kind of environment where you have high growth and inflation, right? And
Yeah.
I think the market realizes it, and that's why you see this kind of flight into hard assets like gold and like Bitcoin.
I like Bitcoin. Look, I think that look, it's not the first time that assets get politicized. I mean, Cuba, Syria. I mean, we have other examples of Afghanistan, of countries who lost access to their assets because of war. I think that the message with the Russian situation is another one, though. Nobody is too big to be confiscated. To be, I mean, I think that China and Russia were thinking that they were too big of a country to get such a treatment. Now that bet is off. It happened during the Biden administration, but I think that the actual administration is of the same line on that
Yeah.
aspect. So probably yes, Bitcoin could be an answer. But I have a question for you. Does it make sense for a country to stockpile Bitcoin without having a decent hash rate to be sure of being able to produce blocks and move that money. What I want to mean is that OFAC didn't do it up to now, but they could impose on American miners to exclude certain wallets, certain transactions. They can. I mean, it never happened, but it's technically possible. Miners
Yes.
are big companies. They are listed on the stock exchange. FBI can knock at their door. That's the basic point. Do you think that countries would like to stockpile Bitcoin using it as gold, I mean, a safe asset, should move also to own some kind of, mining power?
It's a very good question, and to be honest, I haven't thought about this. But my answer would be, I mean, they control 40% of the hash rate in the US, but it's still so much decentralized, right? We know that around 20% is controlled by Chinese entities.
Yeah.
We know that around 10 to 12% is controlled in Russia, right, by Russian entities. I think 5% is even controlled by Iranian entities, right? There's lots of mining activity in Iran. So I think it's so decentralized that even if they did try to impose like OFAC compliant blocks, right, that there's so many other countries and mining activities that could still take your transaction and post it to the net, link it to the blockchain, right? So I don't think like there's a clear risk for like the whole Bitcoin network to become censored by, for instance, the US government, right?
Yeah, US government, Western powers. I mean, I don't want to give political judgments. It's not. I don't care about who is right, who is wrong. But the interaction between the Bitcoin network, now that mining is a very specialized activity, it requires huge capital investments. It's not. We can't mine from our bedroom anymore. Basically, it's
now we can with solar miners.
Yeah, we can. Yeah, there is a company in France who sells boilers for water.
Exactly.
And they include a small mining unit, so you get warm water, and meanwhile you're mining. Yeah, it's quite funny. You are one of the biggest bull about Bitcoin, I think, and you think that it's better than gold, and that there is going to be a rotation from these huge gold gains you talked about toward Bitcoin. Why is that? Is it just the debasement trade? Bitcoin has what properties Bitcoin has which make it better than gold?
So there are many points to disentangle, right? So talking about which asset is better, I think Bitcoin is better in terms of transferability, right?
Yeah,
Divisibility, because you can divide a Bitcoin into 100 million units, right? It's hard to divide an ounce of gold, right? Then verifiability, if you ever possess gold, you can't really tell whether this ring is like 99% purity or like 90% purity, right? You need special equipment for this. So it's very hard to verify, right? It's very easy to verify a Bitcoin. Right?
yeah. It happened also that ETFs got scammed. I think JP Morgan had fake gold in their vault. Some big fund manager found out that.
Yes, they are tungsten in them. Exactly. So it's hard to verify. If you a layman, right, and you don't have this kind of specialized equipment, it's hard to verify, right? And so in many technological aspects, Bitcoin is superior to gold. And anything that is technologically superior will at some point disrupt, right, the old technology. That being said, of course, I mean, gold has a long track record, right, of thousands of years, right? And there's some kind of muscle memory, right, for investors, right? When then there's some kind of increasing uncertainty, some kind of risk off, investors tend to flock into gold, not so much Bitcoin, right? Although it's for me, it's a risk-free asset in terms of counterparty risk, right?
Yeah.
Credit risk, liquidity risk, operational risk, and so on, right? Bitcoin ticks all these boxes, but at the same time, investors still think it's volatile and therefore it's risky. So it's only one aspect of risk, which is market risk, right? Volatility. I mean, gold's also volatile. We know that.
Which you have it. I mean, everybody remembers in Europe about they call it the brown bottom. when Gordon Brown sold most of UK gold and he marked the biggest bot. I mean, gold moves a lot.
Gold moves a lot. It's even more volatile than US equities, right? And so you could argue Bitcoin is essentially as volatile as gold, right? From a pure market risk perspective, but has all these technological features, have better transferability, divisibility, verifiability, and so on. You only need an internet connection to transact, right? It's decentralized and so on. But at the same time, you asked about the shift, when this shift is going to happen. I mean, obviously, based on the performance, gold has continued to attract flows. In my view, it's been primarily central banks, because if you compare ETP flows, right, gold ETP flows and Bitcoin ETP flows, like Bitcoin ETP flows still have been slightly higher than gold ETP flows, right, inflows. So it's been primarily driven by central banks and retail, right? Retail buying coinage and so on. And I think my overall macro scenario is the relative performance between Bitcoin and gold tends to be a risk on, risk off indicator, right? So usually see Bitcoin outperforming in a kind of risk on environment, and gold outperforming in a risk off environment.
Yep.
So, like the recent underperformance of Bitcoin versus gold tells you, okay, what's a kind of risk-off environment, right? Because of tariff uncertainty, geopolitics, and so on, government shutdown, right? You name it. There were so many uncertainties.
We had quite a menu in 2025.
And so my general view is, because of global liquidity growth, because of the fact that it's accelerating, especially with new Fed rate cuts, you'll see that global growth expectations will stabilize and will continue to be positive despite tariff policy uncertainty and so on, right? And that should support some kind of risk-on environment going forward. And I think you can already see it in earnings revisions, right? We've seen positive earnings surprises among US equities, right, and so on. And they tend to lead the macro cycle. So I think we're entering like a renewed business cycle upturn. And I think the moment you see an ISM print above 50 again, right, a recovery in the business cycle, people will start buying risk on trades like Bitcoin again. And so I think that performance leadership will start to change, maybe over the next couple of weeks already. But I think it will definitely change going into 2026, right, where you have like Bitcoin outperforming gold again, right, because of a renewed business cycle upturn.
This is something interesting, because we are gonna have the business cycle going up again, while having a debasement cycle. I mean, there is gonna be two very different environments at the same time. Which, look, I like Larry Fink not because he's powerful, but because he's very sharp and smart when he speaks. He's very able. He's very good at charming people. When he says something, people listen usually. And he started this debasement problem. This Bitcoin is a bet against the system and such, many months ago. And it's very weird, because it's probably a self-fulfilling prophecy. I mean, if people like you, like Larry Fink, like knowledgeable people say that something is going to happen, people are going to think that something is going to happen, and they're going to probably move in that direction. Do you think that we are going to really experience a sovereign debt crisis in Western countries? Because the outcome of that, I mean, it could be fun for people who piled up Bitcoin, but it's not going to be pretty. What do we really have that risk?
So I don't think there will be an outright default, right? Especially by the US government, because they can print their own money. Right?
No, the point is that if the USA defaults, the war defaults. I mean,
exactly. So I think it won't be like an outright default, but will be what Ray Dalio calls a default by devaluation, right? So I mean, you'll get your money back in 10 years or maybe in 30 years, but the question is how much will that money be worth, right?
Yeah, that's
And
the
so
Weimar situation, no?
yeah, and it's like a default, right? In terms if you have like significantly high inflation, right? If you only receive like 20% of your nominal value of your face value of the bond in 30 years, it's like a default, right?
Yeah, it's quite a
And
haircut.
so yeah, it's
People
quite a
in
haircut.
Argentinian bond
Exactly.
never got such a big haircut, actually. I mean, and
Yes.
we're talking of Argentinian bonds, not USA ones.
And so I think it's almost the same. I think default by devaluation is almost the same for fixed income investors. And that's why I think you'll continue to see a divestment from fixed income, like at least sovereign bonds that don't pay so much interest rate, don't pay high coupons, right, towards hard assets. Because essentially we know that US debt to GDP is going to continue to rise, right? It's been rising. So US fiscal debt has been rising by almost 8% every year since
That's
COVID.
shocking.
So
That's
they need, yeah, it's shocking, right? They need 8% in nominal GDP growth to keep the debt to GDP ratio stable. And it's very unlikely. I mean, they can manufacture like maybe 6% nominal GDP growth with 3% real growth, which is very decent, right? And 3% inflation. But I think, yeah, they will have to manufacture an even higher nominal growth rate, right? And the most likely path is via inflation, right? Because it's almost impossible to prop up real growth, even with all these AI investments, right? You've seen all
yeah.
the AI they contributed 1 percentage points to real GDP growth, all of the IT infrastructure investments, right? But like still, it's only 1 percentage point, and you've seen these massive investments, right? So
Yeah,
it's very hard to manufacture like 5% real growth, almost impossible at the because of the size of the US economy. They're already so big, and because of demographics and so on. So I think it's quite likely that they'll need some kind of high inflation regime, right? And that's why investors will need to flock into hard assets. That being said, I think the interesting bit is, and you can already see it in long-term bond yields, uh, they're somewhat anticipating this kind of environment, right? Like term premium have been moving up in bond yields, right? Inflation expectations have been moving up, right? Like
yeah,
break-even rates, CPI swaps, and so on. So, and that's probably one of the reasons why, despite Fed rate cuts, right, they've essentially cut rates by I think 125 basis points already since September last year when they started. So 125 basis points, but like the 10-year yield is almost unchanged.
yeah.
It has hovered around like 4% since then. It hasn't really come down. And it's because inflation expectations have been moving up, term premium have been moving up, things that the Fed doesn't control, right? Only if
No, they
they
can't.
resume QE, right? If they resume QE, right, and end quantitative tightening, and that's what that's what Powell has even publicly said, right? He said like, oh, we want to, end QT, right? We want to resume bond buying. And what's even more crazy about all of these developments is, if you look at the composition of the Fed's bond portfolio, uh, they've continued to pile up like long-term bonds.
Yeah,
Like the long-term bond holdings are at all-time highs on the Fed's balance sheet, but like only short-term paper, they've divested from short-term paper only. So despite all this buying on the long end, right? I mean, bond yields didn't really come down, right? So they will need to buy even more, right?
yeah. I think that we have the example of Japan. I mean, Japan tried it for what, 20 years, 30 years, and at the end it becomes unsustainable. You can handle your yield on the long-term bonds up to a certain point. I mean, your money is never limited. I mean, you can finance that and that and that and that, but sooner or later the market always wins. Also, I think that there is a lot of talk about the Fed independence from politics. Fed has never been independent from politics. people keep repeating the double mandate of Fed, which is maximum employment, stable prices, but Fed also has the mandate of not making the system blow. I mean,
financial stability. Yeah.
if anything, if the survival of the United States is at risk, they have to take decisions which are against the other two mandates. Which is a very weird environment. You are in Europe. You are the head of research of Bitwise Europe. Yeah, the situation in Europe is not much better. I mean, we have lower yields because the ECB interferes with the market much more than the Fed. France decided to go against basic arithmetics. Basically, I mean, they are trying to get 5 from 2 plus 2, and it's obviously not going to work. Germany doesn't look in a good shape. Italy has been in 20 years of austerity, cutting public expenses, making tax hires. Europe looks like they have a even narrower way out because taxes are reached the point that you can't make them higher. Debts got pretty big. Do you think the European investors are going to understand and move to Bitcoin as well? Because for now, Bitcoin looks like a very American matter to me.
Yes, I think so, because I mean the ECB doesn't want to cut rates again, right? They didn't signal more rate cuts,
So they say.
but yeah, that's what they say, right? But I mean, if you look at the French situation, you've clearly identified the key risk, right? I think the key risk in the Eurozone, it used to be Greece, right? Peripheral countries, maybe even Italy, right? During the sovereign debt crisis. Right, but now I think the attention of the bond market has shifted towards France. France,
which is bigger of a problem.
Yeah, it's a bigger problem, right?
Markets are used to Italy being shaky. Markets are not used to France being shaky, which is.
And I think the fiscal debt problem in France actually originates from 2008, from the subprime crisis and euro crisis. I think since then you've seen a strong divergence between debt to GDP ratios of Germany and France, right?
Yeah.
And that's why you see that the bond market is increasingly demanding a higher risk premium on French sovereign bonds. We've seen that there's a structural increase in French sovereign risk premium, right? And I think that's a clear risk. And I think ultimately, if you see, because that trend doesn't look like it's going to reverse. They've just discontinued discussions about the retirement age, right, and so on in France. So
there
it
is no
won't
political
reverse anytime soon.
That's pretty clear. There is no political will to.
Exactly, and so I think that won't reverse. And so at some point, I think you'll probably. I think that's at least my personal base case scenario. You see some kind of blow up in the French sovereign bond market, right? And the ECB will need to intervene, right? That means more quantitative easing, more reserve creation, money creation. So we also end up in some kind of high inflation regime because they will need to cap bond yields in France, but also elsewhere because they have this capital mandate. They are not allowed to buy specific government bonds, right? And overweight, based on their capital key, but they can deviate, I think, in the short term, but over the long term. So essentially, they'll need to buy everything, right?
Yeah, they will buy everything
and cap all these bond deals, German bond deals, and so on, French government bond deals, Italian bond deals. And so I think we're also moving towards a scenario in Europe, financial repression. We have like accelerating inflation rates or higher inflation expectations than nominal bond yields, so negative real yields, right?
Yeah.
And it tends to be a good environment for Bitcoin because, like, if you had to choose between different indicators, like in order to gauge if monetary policy is tight or easy, real yields are the single best indicator, right? So the moment you see a real yields going down, it means monetary policy is easing. The moment you see real yields going up, it means monetary policy is tightening.
Yeah, that's the best.
Yeah. And so if we're moving towards this kind of scenario, I think it's very bullish because it implies monetary easy money.
Easy money, which usually helped Bitcoin. I don't know if I write to my readers, to our readers, that we call it the Mad Max scenario. I mean, civilization basically crumbles. You are pretty well off because you bought Bitcoin, but you are the king of a Mad Max scenario. I mean, it's I don't know if it's something we should wish for, but it seems there is no alternative. Basically, there is no political will nowhere to cut public expenses. It's simply impossible. I mean, people hope that the Elon Musk dodgy stuff and such, but they show that it's basically impossible even in the United States. And the United States has a demographic pyramid which is much better than the European one. The European people are much older. A lot of people live off retirement money. That's never gonna happen. I mean, it's just you said, we have a big crisis in France. They keep arguing about retirement age, which is like
60. I think 60.
Yeah, to me it's very weird. I mean, you have bigger problems.
Yes.
So Bitcoin could save us in a scenario that won't be pretty. Or you think that?
Yes, I agree. Yeah, because I mean, what you're seeing right now is this kind of K-shaped economy, right?
Yeah.
So rich are doing well because they own assets. They own most of the assets, right? And essentially, poor are doing worse because their purchasing power is being eroded via inflation. And so I think because that will continue, I mean, asset price will continue to go up, right? That means also real estate prices will continue to go up, rents will continue to go up, making living standards and so purchasing power worse, right, of the working middle class. And the thing is, in America, I think that problem is more pronounced than in Europe, right? We have high taxes, but we have more social security transfers, right?
Yeah, you're not gonna end up
Yes.
in the street. Yeah.
Yeah, you have like a bigger safety net, but like in US it's more pronounced because I think 60% of Americans live paycheck to paycheck. That means they don't have no assets whatsoever. They probably have high debt levels, right? No assets whatsoever. So they are the ones whose purchasing power is being inflated away, right? And you end up with this K-shaped economy. And how this resets is Mad Max scenario. Usually
Yeah.
historical, you see like social unrest. And I think you can see it in the US already, right? With all these protests, right? It's happening, I think, already.
Yeah, I was reading last night that wonderful book, The Price of Money, no, The Price of Time, which is basically the biggest ever book ever written about interest rates. And the writer reminds us that the biggest revolution and arrests all came out of interest rates out of control, because usually poor people pay for it the most, and poor people have less to lose if there is a revolution, and things usually get ugly very quick, because I think that people rest too much on the fact that we had this system for 100 years, it's never going to change. But things change very, very fast, get out of control even faster. And I hope that somebody will come up, play the adult in the room, say, look, we have problems, it's going to be messy to fix them, but I mean, the fact that people at our age have as only alternative buying some Bitcoin is quite sad, if I may say. Yeah, it plays good, the investment theory, but it's not that. I'm not happy of that. Let me say it. Do you have, everybody talks about price targets, 1 million, 5 millions, Tom Lee. Do you have a price target for Bitcoin in 2026? Because there's going to be the headline, surely. I mean, André Dragosch, 1 million.
So we have an official price tag for this year, which is still 200K, because we
Up to
we
1
believe
December.
it's exactly. We believe that because of seasonality, because of this risk-on environment, the performance leadership between Bitcoin and gold, and other factors, we think there will be some kind of moonshot, right, towards 200K. And based on scarcity alone, global money supply, I think Bitcoin has essentially built this kind of gap, right, between all these indicators. And I think based on current sentiment readings, if you look at market sentiment, it's so bearish right now.
Yes, it looks like
So
we're done. Yeah.
I think downside risks are very limited, right? There's so much bearishness in the market already. And the risk reward is so asymmetric to the upside. The moment you see even a tiny rotation from gold to Bitcoin because of risk on, it can have massive effects, right? We've just put out our chart of the week yesterday, where we showed like you only need tiny percentages of a gold to Bitcoin rotation in terms of capital flow for Bitcoin to double. It's between 3 to 4% of gold's market cap. So only 3% to 4% of gold's capital needs to rotate to Bitcoin for Bitcoin to go to 200K. It's not much, right?
It's not much.
But it has significant effect because gold is already the single most valuable asset, right? It's close to 30 trillion US dollars, and Bitcoin's still 2 trillion, right? Only, and that's why
It's much smaller.
yeah, it's like an ocean dripping into a bathtub, right?
After with basically no sink. Thank you for being with us. You have been very kind, very insightful, if I can say so. And before saying goodbye, I have a spicier question. If you don't want to answer, it's pretty okay. I understand if you don't want to make enemies in the space, but what happened on the 10th of October is not okay. I think there has been a problem of market structure, market participants, market makers, exchanges. The problem is also probably the essence of perpetual futures, which is an idea that the traditional markets discarded because it's kind of stupid, if I may say so. Do you think that Bitcoin deserves better markets, and are they going to come soon to our world?
I think the key question is: do you allow financial leverage, or you try to disincentivize, or even even hold people off from using financial leverage, right? Because I think the key reason why we had this kind of sell-off, why it was so pronounced, was liquidations, right? And essentially auto liquidations.
Yeah.
When people use 20x, 50x leverage,
100x, 200x,
maybe even 200x, right? I've seen a platform that allows 1000x, right? What's the point, right? I mean, I think the probability to lose all your money, I think even at 2x, 3x leverage is 100% over the long term because of the volatility of the underlying asset. But we at Bitwise, we only offer like spot exposure, right? No leverage whatsoever. You own the underlying assets. We even publish the on-chain addresses, so you can be sure, okay, we're actually holding these Bitcoins or Ethereums and so on, right? And I think problem is financial leverage, but it's about freedom, right? Do you allow people, right, to have some kind of freedom of choice to do their own mistakes, right?
No, I do.
And use leverage, although it's, I mean, but I think we can definitely agree on that leverage of more than 5x is essentially it's financial suicide, right?
Because it's like throwing dice. So you think
I think it's more about freedom of choices, right? Whether you have to ban it or allow people to make their own mistakes, or
that they never learn. I mean, I saw on X the same people who got liquidated in every flash crash getting liquidated even this time. So I think there's that kind of people never learn. They think that the latest flash crash is the last one of human history, which is never the case, sadly. André, really thanks for being with us. I hope to have you again later on. Maybe you can confirm your theory. I mean, see, there has been a rotation. See, the debasement trade is something solid. Or see, Bitcoin reached $200,000 by the end of the year. Thank you again.
Thank you so much. Yeah, it was a pleasure. Thank you.
Thank you.